Hello and welcome along to the industry analysis for the operational case study of November 2018. Here we're going to be looking at the real-world gym industry, health and fitness industry in general, and we'll draw out some of the key facts, figures and trends, and that will hopefully put you in a good position then to better anticipate some of the issues that might come up on exam day in November. So before we get into the substance of the presentation, let me just give you a quick overview of what we'll be covering. In the first section, we're going to look at industry trends from a number of different perspectives. We'll start with some important quantitative trends and projections as well, moving into the distinction between budget versus luxury gyms, and then we'll focus on customers and consumers and demographic considerations, which are very important, as we'll see as we move through this presentation. We'll then move into some examples of real-world companies that we can compare the pre-seen company with. We'll look at the franchise versus chain approach, which is an important consideration within this industry, and some of the strategic implications moving forward. In the third section, then, we're going to look at some challenges and opportunities within this industry, certain things like niche alternatives, CrossFit, safety scares, consumer and customer perceptions, and some other issues as well. And then we'll move into the implications of what we've seen before. We'll draw it all together and draw out some important conclusions based on everything that we have been looking at. So let's get into the industry trends then. I'm going to start with a general overview. This comes from statista.com, which is a really good resource if you're looking for industry trends, projections, growth, revenue, sales, and figures like that for different industries and segments. And they have some good data on the global fitness and health club industry. It generates more than $80 billion in revenue per year globally. The US is, perhaps unsurprisingly, the single biggest market worldwide, not only in terms of revenues, but also in regards to the number of members in health and fitness clubs as well. The global market, Statista maintains, is fragmented, with no particular one chain taking a large share of the worldwide market. And that's an interesting feature of this industry. You don't really have any true global franchises or brands. It's often region and country specific. You have more local dominance, as is indicated here in Statista's analysis. So let's look at some long-term figures here in terms of historical growth. We've seen a very strong, steady growth in the health and fitness industry and the gym sector in particular in the last 40 years. You can see here, health and fitness facility attendance has become the biggest adult sport in the Western world. If you want to consider it a sport, it's bigger than football, tennis and golf combined in terms of participation figures. So that is obviously a very good thing from the point of view of a gym company. Things seem to be continuing in that direction, and indeed in recent years they've accelerated with the emergence of the budget gym, low-cost gym sector. Let's look at it more in terms of recent growth, look at some more specific numbers here in the last, say, 10 years. As you can see, it's, again, a growing industry globally. Things are moving in the right direction. But there was, of course, that understandable, perhaps, dip there around the 2008, 2009, 2010 mark, due in no small part, I'm sure, to the financial crisis and the unemployment that caused. And obviously that would have caused people to watch their pockets a little bit more. But since then, we've seen some strong growth figures, and that is due in no small part to the emergence of the budget sector, which has really come on strong in the last 5 to 10 years. And it looks like there's no signs of that slowing down in the coming years. Here's some interesting data. This is from fitness.com, and it looks at some of the overcrowding issues, which seems to be an indication that there is a greater demand than there is supply in this sector. Health clubs have a flatter average growth, 0.8%, than the club members' average growth of 4%. So as membership growth outpaces facilities growth, more members leave fitness clubs due to overcrowding, 17% in 2013, for example, versus 10% in 2012. We're going to come back to that, but overcrowding is becoming a concern as demand continues to rise at a rate that's apparently higher than facilities growth. So that is an important consideration to take into account in terms of things like property acquisition and the space of the facilities, the sizes of the facilities, and so on. Let's look at a more general overview here in terms of some specific numbers. Let's look at the first quadrant here of growth. Revenue from gym and fitness franchises grew by 4.9% over the last 5 years. The gym and fitness franchise industry, that's the franchise model, which is important, we'll come back to that, is worth 2.9 billion. Expansion is expected to keep pace at 5.4% through to 2020. And baby boomers, interestingly, increased health awareness and disposable income will boost revenue by about 3.7 billion by 2020. So in general, everything there is pretty positive. Things are looking very good in general number terms for this particular industry. Now here's where things get really interesting, and this is looking at 3 different segments: high-end gyms, mid-range gyms, and low-cost gyms. You can see the cost or price points there, $100 and $250 per month. This is the Canadian market, by the way, just in case you're wondering, but the Canadian, North American are often representative of the developed nations in general in terms of the take up and the kind of comparative shifts between the different segments within the industry. So here we're looking at Canada. Some very interesting changes. You can see here that high-end gyms are obviously a relatively small segment. This is looking at changes in the number of gyms opened and closed in Canada in the previous year by price range. And we're looking at gyms opening, very few high-end, very few mid-range, and a huge number of low-cost gyms have been opening up in this last year. 581 low-cost gyms in 1 year alone. That is absolutely staggering compared to the numbers for mid-range and high-end gyms. And then look at the closures here at the bottom of this graph. 278 mid-range gyms have been closed. That's a $40 to $60 per month price range as indicated above. And that is a very telling graph, I think, because it just shows that this middle range is really being squeezed out of existence and the low cost is coming on in leaps and bounds. The high end, it seems, is relatively secure in terms of its opening and closing figures. You can see that there were no closures in terms of the high end gyms. They seem to be more stable, a stable segment, and there isn't as much risk of them suffering as a result of the entry of these low cost gyms. But it's really the mid range that is struggling to keep up, and that shows again no signs of slowing down. So you can see here, this is just looking at it in terms of percentages, and this is for the UK, again, a comparable country, a developed nation where these trends seem to be universal across developed nations. And we're looking at the low-cost segment in growth terms, the mid-market losing share and low-cost coming on very strong at 58.8% compound annual growth rate from 2012 to 2015. You compare that to the mid-market at 0.6, which is the lowest of the 4 segments being compared here. Premium at 3.3% and independent at around 2%. But as was indicated in the previous slide, the mid-market is suffering most and the low cost is really pushing on with healthy compound annual growth rates. Now, here we're moving on to customer analysis. This is a really important area when it comes to looking at this industry because customer perceptions, customer behaviors, customer fears and insecurities and things like that, the psychological factors really do come into this a lot in terms of how a gym should be designed, how it should be set up, who it should be targeted at, how it should be marketed and advertised and promoted and so on and so forth. So here we're looking at some of the reasons which were given in a recent survey as to why people decided to leave or quit their former health club. Unsurprisingly, perhaps, expense price is one of the most important considerations. People are always going to be thinking about their pockets, of course. Another important consideration here was the location. So location and price seem to be two of the really important considerations. I wasn't using my membership. It could be related, of course, to price, because if you're not using it and you're paying, then that's really a price consideration as well. So those two kind of go in hand. But the location is certainly something that is a separate consideration. So price and location seem to dominate. Then we're looking at crowding, and this again pertains and goes back to what was indicated in the previous slide. Overcrowding does seem to be an increasing concern, as it seems demand is outstripping supply, although the low cost explosion is to some extent addressing those concerns. And then very interestingly here, you see I felt out of place, and we're going to come back to this, but I think those are 4 very important factors that have to be considered by any gym company within this industry: financial considerations, geographical convenience, overcrowding, and this feeling out of place. We're going to come back to this later on. Now, it is very important, I think, in this industry when it comes to market analysis and customer analysis and considerations about promotion and advertising, for example. The male-female division here and distinction seems to be very important when you look at the data. There are certain very conspicuous trends and differences between the kinds of exercise that males and females tend to engage in, and the rates of use, for example, amongst males and females are very, very different in many cases as well. So it's an interesting thing to look at and to consider. So here you can see the different exercise routines broken down by gender, and in certain areas such as weightlifting and running, you can see that men are the predominant gender participating in those particular kinds. Not surprising perhaps on the weightlifting front that men are the dominant gender in that respect. And then when you look at things like yoga and Pilates, women far outstripping men in participation rates in those exercise routines. Competitive sports, then men dominating that area, and then women dominating the group fitness and classes kinds of exercise routines and regimens. So we're going to come back to that. It raises some interesting points from the perspective of a gym and how they target their market and what kinds of facilities they would consider introducing into their facilities. Here we're maintaining this focus on men versus women, and we're looking at two factors here, or two dimensions: workout location by gender and exercise frequency by gender. Let's start on the left with the primary workout location by gender. And here you can see home workout, it tends to be women who are more likely and more inclined to work out in their homes, and then correspondingly men more likely to work out outdoors. In terms of the gyms, interestingly enough, you can see there that's more or less equal in terms of the rates of gym use. So really it's the outdoor versus home exercise routine where the male-female division and difference can be seen. In other respects, in other areas, specialized studios, more or less the same and comparable. Hotels, men a little bit more likely to use hotel gyms and exercise facilities. Not entirely clear why that might be the case, but the real differences there between men and women are in terms of exercise location, certainly, are in the home versus outdoors area. Let's move then to an exercise frequency consideration by gender. And you can see here that in terms of the rarely never, women are marginally more likely to report that they rarely or never exercise. And then at the other extreme, you can see men are more likely in general to exercise more than 5 times per week than women. And then when it comes to the kind of mid-range, it looks like women are more likely to exercise once or twice per week, whereas men are marginally more likely to work out or exercise 3 to 5 times per week. So we're going to move now into the industry structure considerations. We're going to come back to some of those customer perception issues raised at the end of the previous section a little bit later on when it comes to challenges and opportunities. But now I want to shift the focus and look at some companies within this industry, use them as examples that might shed light on GymFit, the pre-seen company, and we might be able to draw out some lessons, anticipate some of the moves or strategic changes that might be made by the pre-seen company GymFit on exam day. So here we're going to start with Crunch Fitness, which is one of the major franchises within the United States context. Crunch Fitness is a US chain and it was founded in 1989. It's had very mixed fortunes since its founding, which is interesting to look at. And some of these changes have really tracked the kind of fortunes of the fitness industry in general, as we'll see in the next few slides. It was bought by Bally Total Fitness in 2001, but it was found to be unprofitable after a number of years, and it was sold to Angelo Gordon & Co., which is a private equity firm, in 2005. And then in 2009, interestingly and tellingly, unsurprisingly perhaps, with the financial crisis, they filed for bankruptcy. Since then, however, it's changed its direction and its strategy, and it has actually become successful once again. So how has it done this? Well, let's look at its original strategy first and then contrast it with its current direction. The clubs became popular initially by appealing to young, upscale members of society and featuring heavy promotions and marketing. They also featured some very unusual classes such as pole dancing, bicycle-based yoga, if you can imagine what that involves, co-ed wrestling, and capoeira, which is a Brazilian-style dance routine which was incorporated into fitness classes by Crunch, and also something called, again, a very strange and interesting thing to think about, karaoke bicycling. So some really interesting kinds of unusual exercises and routines and classes that they offered, and that was what really set them apart at the outset. They've retained some of that kind of quirky approach to their classes and the kinds of things that they offer, but this was their original strategy. But since 2009, they've shifted their focus a little bit more towards appealing to people who are maybe a little bit embarrassed about going to gyms, about people who might not be very well seasoned exercisers. They might not know how to use facilities. They might not have done it before. They might feel a little bit out of place in the typical gym environment. It seems that that is really the target market for Crunch since 2009. You can see here, we're talking about no judgments are the best kind of judgments. So no judgments has really become its kind of slogan and its strategic focus since 2009. Differences are encouraged, and again, that word quirk comes into it. So they've retained that initial identity. Quirks are welcomed. They talk about positivity, inclusivity, and fun, indeed, being a major part of their kind of selling point or their brand identity. So we're going to have a quick look here at a video of their website. This is just to give you a sense of what exactly this sets them apart in terms of their identity. You can see here on their landing page that they're dealing with they have dancing people, so a fitness class is right front and center, people having fun. It looks very relaxed. As you move down the page, then again, another class image here, a group image. So they've really put an emphasis on that kind of social aspect of exercising and people together, exercising together and enjoying themselves in a kind of really relaxed and casual environment. You don't see a lot of images on this website of very muscular, highly athletic people looking like they're involved in competitive kind of training. They want to have fun. They use the word fun throughout their website. They use this phrase, things to lift, instead of weightlifting or bodybuilding, which has a more serious sound to it. And again, they're looking at these differences. Welcome, no judgments are the best kind of judgments. Fun is emphasized again in another area of the website. And so they really want to appeal to those people who might be feeling a little bit out of place. That comes back to that issue of feeling out of place in other gyms where things perhaps are a little bit more competitive, a little bit less tailored to the beginner, and fewer class varieties are offered. So that's really what sets Crunch apart in terms of its brand imaging and its strategy and the kinds of members that it's looking to enlist. So I want now to shift the focus to this franchise model, because Crunch has since 2009 pursued the franchising model as the best way to achieve growth. So you can see here are some of the revenues and sales figures and profit figures that they've registered in the last few years. So we're looking at, this applies to the gyms, the per unit there, they're talking about a particular franchised gym. And this is the median gross sales per unit gym, as you can see on the left, $1.9 million, median cash operating profit per unit of $444,000, and then median members per unit of 6,440. So that is actually they're quite impressive numbers really in the grand scheme of things. They're quite healthy operating profits as well. So they seem to have hit on some kind of successful formula in the franchise system. And you can see here, this is the capital requirements, the typical capital requirements for the Crunch franchise. Nothing to be sniffed at here. $1 million minimum combined net worth of all partners, $400,000 minimum combined liquid assets of all partners. So it's not trivial in terms of the fiscal requirements to apply for a franchise license. But they do offer quite a lot of assistance all the way through the development process. And they offer, for example, support in terms of site selection, looking and offering market trends on a national level, specific demographics about areas that you might be considering investing in, and so on. They also help with design and construction, and they say that they offer prototypes and design manual guides in a simple, straightforward and easy to understand format. They also offer assistance with training and development. They provide a mix of online and in-person training for franchisees, key managers and staff before opening the club, and indeed ongoing training and consultation after the gym is open. So really hands-on support throughout the franchising process, and this has created a lot of success for Crunch, it has to be said. You can see here some of the figures are quite impressive. Solid track record, 225 plus open locations in the United States, commitments to open over 500 franchise locations, 24 states, and indeed they moved beyond the United States as well and have franchises operating in 5 countries. They say consumers seem to love them, 1 million plus members, 6,400 median members per club as was indicated previously. And they claim to be the leader in the high value, low price segment. So unsurprisingly, perhaps, Crunch's success has also been predicated upon adopting that low cost model that is really revolutionizing this industry and really spurring on growth over the last 5 or 6 years. So we have some other examples of chains, successful chains within this segment, this low cost segment, and we're looking here shifting from the North American context to the European context. These two, McFit and Basic Fit, have locations in a number of countries in Europe. Interestingly, they have not yet, I say, ventured into the franchise model. It remains to be seen whether they're going to consider doing that. At the moment, they are a standard chain. Very similar histories and trajectories for these two different companies in Europe, but there are some interesting little minor differences which we'll come back to a little bit later on. They're less tailored and less, it seems, beginner friendly in their approach than Crunch, and this is an interesting difference to focus on. More focused on the essentials, large spaces, no frills, easy and quick access to the fundamentals of exercise, the equipment that you need to, basically all the equipment that is needed regardless of the person's level of fitness requirements. So let's start with McFit. Founded in 1997 in Germany, it's grown really rapidly in the last 5 years. They have at least 246 gyms across Europe as of 2017. And McFit also runs McFit Models, which is a sports model agency that declares itself to be the largest in Europe. So an interesting little bit of diversification there. One wonders whether other companies might look into the McFit as a kind of a good template for how one of these low-cost gyms has actually managed to sustainably diversify what it does and its offering. Supported by the famous fashion designer from Germany, Michael Michalski. So let's look at the locations of McFit. You can see here they are located in Germany, Austria, Italy, Poland and Spain. So that's quite a good spread there throughout the mainland Europe. And if we look at their pricing model, unlike some other low-cost gyms, interestingly, McFit actually does require a 12-month contract, a tie-in of 12 months minimum, with cancellation windows occurring every 6 months. So you can see there that the price point is quite low. It's around €20, 19.90, which is fairly standard for these low-cost segments. Minimum contract period, as I said, at 12 months, a one-time activation fee as well of €29. And 2 per year, €15 training and service fees as well. So a couple of little hidden costs in there, not exactly as straightforward as some of the other low-cost gyms, but that might be an indication of just how competitive this is becoming. They're having to find other ways of securing extra finance, but their real upfront promotion is that price point of €19.90, which is a good competitive price point. Over 250 studios across Europe, as was indicated. And now, interestingly, they have recently introduced live training courses and classes. So whereas before they offered the virtual classes, which were, they had trainers pre-recorded on large screens and people could go in and follow the classes that were produced on screen. Now they're introducing live classes with real fitness instructors being present at these classes. So there are also some additional fees, as I said, in the form of activation fees and these training fees. So that might, as I said, be an indication of this higher competitiveness over the last 5 to 6 years in this low cost segment. So as I said, from virtual classes to live classes, this is an important development, and it's really important to consider this from a costing point of view as well, because of course the more personnel you bring in, the larger and the higher are the operating costs. And the question then is, how can this be done in a sustainable way in this highly competitive low-cost segment? So McFit originally only offered those virtual classes, as I mentioned, with a video recording of an instructor replayed on a large screen at the front of an exercise studio. They called it their Cyberobics offering. However, since just last year, very recently, McFit has started to roll out these live classes with real fitness instructors leading these classes. Now, that might be very telling. It might speak to the psychology of the market, of the customers. And as was indicated in the previous section, when we looked at the customer analysis, particularly in terms of male versus female, it seems that the female segment in particular is very keen on, and much more keen on, having group classes, and having that kind of social component seems to be very important from the perspective of female fitness training. And that seems to be something that has driven McFit to consider bringing in actual people rather than having pre-recorded screens. And this seems to be more attractive from a social point of view, social fitness and social classes, more interactive, more tailored, and perhaps indeed it makes people feel like they can ask questions, for example, if they have any doubts about what they're doing. They can actually interact with the instructors, and the instructors indeed can then also offer helpful feedback if certain people in the class are not performing the exercises correctly.